Why you on the Zoom after a while? Good to have you on, man. Okay, so what we can do today is I'm gonna go over pretty much everything that I went over this week, or everything that I went through this week. All the chart work is already kind of settled. I was active Tuesday and Wednesday for the most part. Monday, the only thing I was active on was the continuation from the Zoom last week, where we talked about um, kind of where we would see EU going, at least for the short to medium term. And after I go over that, we can just go over and see what's happening, what could happen with the pairs that I'm looking at, and from there, yeah, I guess we can just do case studies after that. Okay. So first things first, this was last week's Zoom. If you didn't watch the Zoom, it was around the 1 hour 56-minute mark, where we had kind of just discussed why EU, well, not necessarily why, but it's just like, hey, if I was to have a bias, this is what my bias would be. I just didn't really go into the why, so here's the why. Obviously, right, with pretty much with what we've talked about over the past couple of weeks, right, the entire goal that we were trying to achieve, right, is to catch a transition, whether it's bullish to bearish, bullish to bullish, bearish to bearish, or bearish to bullish. Right. And I've kind of explained that a bit already with the Wyckoff cycle, pretty much with what we're trying to do. That's kind of the whole objective, is to catch a transition from up to down, or like I said, with the other possibilities. So obviously, right, we don't like to only wait for the initial break of structure. We can't be too hasty, right? So something that people always ask me is, where is the what is the, or how would you consider something to be a reversal BOS rather than a CBOS, right? So obviously I have two CBOSs, CBOS, CBOS. It's not CBOS and then it's a reversal, right? If we know, right, any type of internal structure, they're all considered CBOSs unless we are to have a transition or a model in play, right? So obviously this CBOS solidifies the high, meaning that whatever pullback is going on, the objective is for it to take this out at the bare minimum, right? So that's why it doesn't matter. You could probably catch some type of continuation, maybe be high risk because you're selling at a very high premium. But that target is achieved. Once that target is achieved, you guys know that obviously this, right, into the move up, and then we come down. That is also a CBOS, right? It's an LG. Why? Because we swept highs and then we did the same thing here. But I don't want to also confuse that with potentially an LG here as well. So that's why I'm still only acknowledging, right, that these are all CBOSs, right? CBOS. So once we have that, right, this is a news reaction, I believe. The news reaction comes into a POI. This is not my buy zone. Why? Because I'm still in a premium, right? So if I am to catch a trade, I am to wait for a transition or a model, right? So based on pretty much this low coming into the high, I know that technically there is some type of unwillingness to the upside. Why? Because this high failed to break a previous high, and there's CBOSs internally, right? So if I'm coming in here and if I'm to take a buy, right, maybe you could justify some type of LGC, right? But I don't see this considered to be an LGC unless we would have broken this. So based on the POI present, there is a reaction. After the reaction, we then break the full POI. That is disruption. Okay, so the disruption is from this high into this low because it is disrupting the continuation of the POI here. So that gives me the internal perimeter. We come into an inefficiency, and that is why I was bearish last week at the end of the Zoom. Okay, so move on to the next. So this is, I believe it's the same thing. Yeah, it's same same chart as M1. As you can see, this is why I had marked the CBOS, because this is the final low into the downside. That is a CBOS. So the CBOS leads into a order flow disruption. Order flow disruption comes back into the POI, and it continues lower. Okay. Any questions on this one? Nobody, any questions? No questions. Next was, let me see what this was. I believe this is a loss I took. Yeah, this is my loss on the 30th. I think this was Tuesday, right? So um, I have anticipated reaction of a POI, right? CBOS. Then we have an unsubstantial new high. Honestly, very aggressive because I realistically should have waited for this to break in order to actually confirm that we are going to transition downward. But continuation BOS, brother, that's course material. I can't, man, I can't. CBOS, this is course material. Anyways, POI, bullish POI, realistically should not have been bearish only up until the red line here was broken, but unfortunately, or luckily for me, I was being a bit aggressive into a low momentum move off of a reaction of a POI. So I was anticipating this to at least give me some type of reaction. And this is where I made the mistake, right? Here's where I made a mistake. Because this is still bullish, right? And obviously, clearly we are taking out a very significant high here. My take profit, right? And I didn't include this on the image, but in the back of my mind, I knew this. I even had this before I set this to be the target. I should have kept this area as right my bullish zone. Why? Because the external, oops, sorry, the external is still bullish. So if I'm taking this retracement trade, I should have taken that right into the POI and then maybe look for a hedge or look for some type of continuation into the upside. But that's pretty much the lesson that I learned from this trade scenario. Let me do this. Um, right, obviously it got a very nice reaction here. Right, once we had the internal SD, right, and it's a structural disruption because we have a low into a high, then we have a retracement. Right, retracement is confirmed, that breaks through, and then we break through again. So I would consider this high to be a type of disruption. So I move my invalidation into the high of that, meaning my risk is now about 30% of the original position, right? I didn't move it into break even. I moved it into the invalidation just because I don't want to get caught up, right? Before my invalidation is met, just for it to continue lower. So I'd rather take a partial loss and secure a bigger move rather than have my break even, right, be taken before the move. So that is that. Right. And unfortunately, right, like I said, I should have TP'd, right, in that general area, right, because this is technically, right, based on the previous image, I already took it out, but based on the previous image, we had taken a structure, so it's low into high into retracement, and this should be the minimum target, right? That should have been my trade scenario. And there is even an internal reaction right here, right, which would be considered in alignment with the external. So this breakup structure would be enough, right, because it would be considered pro trend. And then obviously a validation at the low, clears your clear highs, and that should have been my trade scenario, right? So it just goes to show, right, a lot of the times I've noticed it's the issue is not the model, the issue is getting direction correctly, right? Because for the most part, I would say I posted this on Twitter. Most of our losses are categorized by either having wrong timing or having the wrong direction. And I think it's the simplest way to put it. For me, I would say the direction part is the hardest part. I feel like my timing is, decently good with looking for, these models. So now it's just a matter of shifting the mindset into thinking right? That just because we are at a high does not mean I want to sell. Maybe I just want a retracement so that I can continue the external buy. All right. That's me trying to get the direction right. And that's just more so with focusing on a little bit of the external, whatever it is that you're using, whether it's a scalp, you're focusing on the intraday. If you're looking for an intraday trade, you're looking at the swing. Right. But more than likely, I'm not too focused on the swing if I'm scalping. Cool. And then this is one of my wins into the ups. I mean, my one of my recovery wins on the 30th as well. This is very easy, right? Because we had already seen the momentum from news, and this is also something that I've noticed from news moves is after a really big impulse from any type of news scenario, I usually see some type of immediate continuation. Um, or a reversal. It kind of just depends, but I always see some type of internal move right after a high momentum news event. Sorry. And it's kind of just a trend that I've been seeing over the past, I would say like 1, 2 years. So I don't know, maybe you guys can do what you want with that type of information. But yeah, my trade scenario was obviously high into low, more of a micro. I know that we swept the high, we swept the low again, so my validation is here. And I was aiming for a daily low, I mean a major intraday low, sorry, down here. So not the best trade if I'm being honest, but it follows the rules, it follows direction, and it's a winner. So that bottom line, that's kind of all that matters. Let me see. Right, next trade, right? Very clean, easy continuation. And this is kind of what I mean by kind of trying to leverage where price is coming from into seeing where we could potentially go. So it's very justifiable to be bearish based on the first external move, right? But that's why we study the reactions um, so that we try to capitalize on whether we're going to be bullish to bullish, bullish to bearish, et cetera, et cetera. Okay, so this is currently in play, and this fixes that. Well, not only say fixes, but it applies what I had said previously about getting the direction right. Um, second, so I know that this POI is in play. I know the POI has caused the reaction, but I'm also acknowledging that this is a CBOS, right? CBOS, right? Now we come into the high, right? A CBOS occurs. Right, and we then get a bullish liquidity grab. Once the bullish liquidity grab occurs, okay, now I'm in alignment with the previous high. So I'm going to aim for a minimum of here, right? But there is this technique that I've kind of been not necessarily working on, I would say actively, but it's something that I'm kind of trying to focus on this year. Is that if I'm looking for these immediate scalp continuations, which like I did here, right? The region was my point of interest. This is the final low into, I mean, the final high into a low. That is my sell to buy area. So I'm only looking to catch the mitigation of that. And after that occurred, right, there was even an internal transition, which could have been pretty much the full justification. This is kind of where you would get a high risk to reward trade based on internal reactions, because obviously, right, if we are looking at the bullish LG, right, we know that this is also a CBOS, right? Even if this is not fully bearish, this is still a CBOS, and there is still potential bearish momentum coming. That's why you see whether that be the area of region, right? But this could be a type of POI, and that POI caused a reaction. That reaction then breaks through, right? And that sets up, an internal continuation here. So that would have been pretty much a high risk to reward trade. But this transition here was my reason to hold, right? That's why I have my SL out invalidation, right? But after the transition, and after this creates a new high, this is my new invalidation, right? As we are creating new structural ranges, I can move my invalidation. So low, right, into high. We took out the previous high, and then that there created upwards of new highs. So because I'm seeing this and then take on a new internal, well, I would say maybe more of a micro, but a micro high is being taken, then the micro high is being taken again. Okay, then my invalidation is here. So I'm kind of not looking at the immediate. I'm looking at the immediate to happen, and then the first external is my new invalidation. So kind of just carrying that through. So once this low breaks this new high, then here's my invalidation, right? And then obviously here I could have trailed it even more, right? Where once this low breaks this high, then this is my invalidation, right? But it had already hit the target. Okay, so that's that. This was one of my losses on Wednesday. Yes, this was Wednesday. Excuse me. Um, so I was looking kind of just for an easy continuation into the upside where I see an internal bullish trend. I see a potential, I would say this is justified. I wouldn't say this is clear in terms of having an LGC because I don't want to confuse an LG with just a confirmed lower low. But where I've messed up, um, and obviously this was in hindsight, is that Let me see. Obviously, the price section after that CBOS isn't the most convincing in terms of the market continuing lower. How do you confirm a CBOS without an immediate reaction or reversal? Do you wait at least? Wait. What are you talking about? One second. January 30th. Give me 1 second. I'll come back to this trade. I think it was this one. You're talking about this chart, right? Obviously, the price action after that CBOS. Which CBOS? Are you talking about this reaction here? Are you talking about this? I'm confused. Any Look, and also, guys, this stuff is on. Like, I know. I think you're one of Alex's guys. My stuff is on YouTube, man. All of my stuff is on YouTube for free. If you want to go look into that, like, I don't necessarily want to teach course material on Zooms. I've kind of expressed that. I'm confused on what your question is, if I'm being honest. How do you confirm a CBOS without an immediate reversal or reaction? Any initial break of structure is a CBOS. The first structure is a CBOS. I mean, the first structure break is always a CBOS. Why? Because that initiates the pullback. Um, and I want to keep that as pretty much as something that always happens because I want to focus on the continuation over reversal mindset, right? I can confirm something as a continuation BOS. That way, I'm not trying to sell here because all this is doing is solidifying the high, and I know that my bullish, I mean that my low has already been solidified after a break of structure. So I have a low into a high, CBOS. This should continue higher. That's the entire point of CBOS. But yeah, all this stuff is on YouTube, man. Just look up my YouTube RCVisionaries, sorry. All that's on there. And as for somebody, I believe it was Tony who asked what me a CBOS is. That's a big problem, bro. Just being 100% honest, that's a very big problem. You should know this. If you had gone through the course at least once, you should know that. Anyways, moving on to the next. I hope that answered your question. Your question was a bit confusing, sorry. Anyways, this was my second loss, and this was on Wednesday, I believe. After the Wednesday loss, I actually caught the winner in the opposite direction. And this is also another tendency. I'll come back to that tendency. But like I said, I was just looking for an immediate continuation, low into high, CBOS that solidifies the high. So I know that this is just the pullback based on the external trend of what we're going. And there is a relatively close high here. So I was anticipating, right, to potentially continue or have this continue higher. I had seen the final low or the final high that created a low from a micro standpoint be broken, right? So although that is a continuation of BOS, I can assume that based on the external trend, right, that we would potentially at least go higher, or at least give some type of reaction, which is exactly what we got. I got a reaction. Really could have put my POI based on here because this is the internal there that broke low. I could have used the entire POI, but after the POI was met, the reaction was given. I could have pushed my invalidation like I put here, but like I told you guys, if I'm going to make this my invalidation, then I would have needed to break and then break again in order for this to be my invalidation. Um, at least without it not being a bit too aggressive. So ended up just taking the loss there. But because of my loss, I now understand that this is order flow disruption. Why? Because we had a POI reaction. The reaction is clear, and then that breaks through. So once that breaks through, that brings us into the opposing directional or the opposing direction. And this is where I took my second position. And it was I would say it's like about a 3-to-1 almost. But that kind of recovered the initial loss. And this is also another tendency that I've seen over the past couple of months, or even years, in my opinion, is a lot of stuff with the whenever I'm taking a position or if I'm trying to take a continuation, right? There is usually if I take a loss, right? And I have my invalidation in place, then potentially there is going to be a move in the opposite direction, especially if I am being very, very good with following my rules, right? Because this loss, or the initial loss, sorry, based on the buy from here, set up, right, the sell here. Why? Because the order flow disruption is a protocol built on a failing POI. And I know we've all had failing POIs before. I know you've seen a POI maybe hit and then hits break even or then hits a sell, right? The order flow disruption model is essentially a protocol that's built around the failure of certain POIs, right? That is what disruption means. You're disrupting the original direction, right? Where it would have been the original order flow direction would have been up, but it interrupted it, disrupted it, and that's why we capitalize on the opposing direction. That's kind of where the mindset of that model is coming from. Right? Same thing with structural disruption. It's just the same thing, but from a structural POV. And the LGC is just a continuation model. Um, anyways. So this was my last winner. I believe this was on the 31st as well. Yep. Once again, after right, my TP had hit for um the previous trade, which I had taken TP at a bullish POI, which was the fix that I talked about for the first trade, where I talked about with the loss, where we want to learn from these losses and we want to effectively use the solutions in following trades. That's kind of why I took profit at the bullish POI on that AU sell scenario. But this actually then set me up again for another potential continuation. We have bearish momentum after the original trade, but I'm only looking for a transition to occur. So I have a high into a low, into a high. Obviously, we could argue that this is a CBOS internally because this is the final high into the low. But once this then has a CBOS into the opposing direction, right, I would still consider this BOS to be a bit aggressive, even though that was what my previous trade pretty much was. I am trying to not be as aggressive, but more so wait for the model to occur. And once the model occurs, okay, now I can execute, right? So even if this here would have been a great trade as well, I would have considered it to be a bit aggressive, right? And I'm not trying to make the same mistakes that I keep making. So, excuse me. So I want to only take trades after the reaction is in play. Why CBOS is here? So realistically, why I'm saying it's a CBOS is because internally this is bullish, even if the external here is technically bearish. So I'm seeing this as a solidification of the high, but it's a CBOS, so I could still anticipate this to take out the high again, or sorry, that's a bit too deep. To take out into the high, and then it could probably react, and it still doesn't invalidate the external, right? That's why I don't want to take this position, because if I'm taking this position, then my invalidation has to be here, and that widens the stop a bit more. So if I wait for the reaction, right, which is an internal LGC, right, which is inherently a continuation model, we have an LG that is in alignment with the external, then I now have, right, my perimeter with the entry, the invalidation, right, and potentially a 1 to 3, and that clears out in about, mind you, this is 10 minutes, so in about 10 minutes. All right, so it's a 1 to 3 in 10 minutes. I think that's highly efficient, right? Justified, rules are followed, right? And the perfect result is taken, right? I love to see when we have a high momentum move right into the target, because that tells me that I followed my rules correctly and I got the market timing correctly, right? Because sometimes if I would have taken this, right, then this would have taken me from about 10:50 something up until here. So this would have been about 20 minutes, right? Whereas the initial pullback would have taken, right, let's say from 10:50 here, about 15, I would say about 12, 13 minutes, right? So to get to the target lasted longer than it took to find the setup. So to me, that wouldn't be as efficient, right, as here, because I waited for here up until here for the setup to essentially show itself, and that is about, I would say, 20 to 30 minutes, and then it's a 10-minute delivery. So that shows to me that I was patient here, that was highly efficient, right? And I'm just taking it based on ratios. It's like the pullback took this much, the effect took this much, and if the effect is faster than the initial setup, then I would consider that to be highly efficient, right? And that's how I would be able to explain that in a way to where you can also use this for a swing standpoint, for an intraday standpoint, because it's all ratio, it's all proportions. None of it is actually like concrete to a level of structure, right? Obviously, this is a scalp, but you could do the same thing on a swing, on an intraday, etc. Um, cool. So that probably concludes all of my trades for today. As far as biases go, I hate how this week turned out. It's just another week of choppiness. I still think we're bearish, if I'm being honest. In terms of DXY, I am 100% bullish long term, especially after we had the failed reaction. If we're looking here, if we're looking solely at reactions, all right, we tapped into the POI. There was obviously an internal reaction, but I would consider this to be a full structural disruption internally, or yeah, internally based on the swing. This would be a major intraday, right? But once this broke here, I am 100% bullish again, right? And this goes back to what I just said before with I don't want to take a trade too early because let's say, all right, because even though we're within no man's land from the internal side, we could still argue that, hey, maybe there's a 50% POI, there's an internal reaction, right? And we can take a buy here. But that buy would have taken your stop before invalidating the bias, right? That's why invalidation points, sorry, are very, very important. So if I'm taking the initial move, right, unless there is a transition here, then my invalidation has to be here. And it widens the stop, but you're protecting yourself, right? So you could either be very aggressive, take minor losses without breaking the bias, or you could wait for some other type of scenario, right? I didn't trade yesterday or today. I just didn't see anything. All I saw pretty much yesterday and today was an impulsive move on M5. Uh, excuse me. All right, but before we get into that, I just want to say, once we had this break, right, I am 100% bullish. There's a reaction internally that failed, and you could argue that to make this bullish, I mean bearish, I'm sorry, but at the end of the day, the external is still technically bullish. So now that this has been taken, right, in my opinion, I think we're still going to continue higher. Right, after this POI has then failed, then from a weekly, right, I would still argue that we are bullish. Still 100% argue that we are bullish. Why? We have a high into a low. We have a retracement, reaction is then broken through. So I'm kind of anticipating this to just be a correction, and I see us being bullish for the rest of the year, if I'm being honest. But I don't think that directly matches with AU, but with EU, I would say that that doesn't make us still to be bearish, especially after this week. I still think this is just one big old correction. But having this bias, in my opinion, uh, a good target to have is a bullish POI within a bearish trend, in my opinion. I think that kind of increases the probability of you reaching that TP rather than waiting for the overall leg to break. And what do I mean by that? Once we fully convert bearish, sorry, which would be after we break this low, and we get the pullback, then my next reasonable target is here, and that is about 600 pips. You know what I mean? So that would give you an external bias, and you just have to catch intradays in between, and hopefully, catch some relatively decent moves there. But overall, I'm still bearish on this. AU, this one is a bit choppy, but I'm still bearish. I feel like I still have to be bearish. I think the only way that I'm not bearish on this is if, let's say, we react from here and we break a POI. I mean, if we break a high, sorry, we break a significant high. Why? Because this is the final high into the low. Ooh, I don't know why that's lagging. Sorry. Excuse me. Sorry about that. But we have a final high into a low. And in order for that to be confirmed on willingness, then the high has to break, right? So if the high breaks, then this is solidified, and that is not breaking the low. So I would anticipate us to potentially come back up here. And if you come back up here and then we have a general reaction after we sweep liquidity, then that would be reason for us to then continue to the low. All right, because that would also be a failed reaction based on a low. We have a failed reaction until we come back into a POI. This is the high into a low, right? So this is a reversal BOS from the internal, but from the external, it's a continuation BOS. So based on that, we then continue lower. But this is only a scenario that makes sense if I'm looking at this reaction to give us something, right? That does not mean that I'm bullish. I'm just saying I would be bearish if that happened. But either way, internally, I think I could still catch some continuations right into the downside. For all we know, this could just continue lower. But yeah, overall bias still bearish there. Um, and ES1, I have not really looked too much at the S&P, but when can you not be bullish on this, if I'm being honest? I don't know if any of you caught some buys on this, but just no reason not to be bullish, right? Any type of dip, kind of a reason to continue higher. And yeah, it seems like we're at all-time highs again, and I don't see this stopping if I'm being 100% honest. I don't see a reason why. Don't see a reason why, yeah. Yep, but I do like these moves that happened today. I do think we're still going to continue higher. I mean, lower, I'm sorry. Um, but yeah, I don't see any reason to not be bearish. Bearish, CBOS, continuation, high into low, high into low, high into low, still continue bearish. But yeah, that's kind of what I see right now. I don't know if you guys have any questions, concerns, anything you guys want to go over. I'll be on here for a while, guys, so I'm not really in any type of rush. Yeah, any questions, guys? Any concerns? Any case studies? I know you guys have questions, so let's go ahead and go through them now. Because if not, I do have one last thing to cover. No questions, no concerns, guys. Nothing. Something this is getting off now. Yeah, man. For sure. Enjoy. Okay. Cool. So no questions. I guess the last thing I do want to cover is I want to break a belief for a lot of you today. And I have one question is why do you not trade indicators? Why do you not leverage indicators? It could be any kind, but I just want to know why not. I want to break a belief today. So it's my only question. Why do you guys not use indicators? Any type. It lagged behind price. Everything does, bro. Yep. So that I would say that contradicts the argument. Right, but why do we not use, let's say, like and I've never really used these, but like moving averages, let's say volume profiles, right? Let's say, I don't know, the list goes on and on with indicators. I've never been a pro, but I just want to know why not? Why have we never used them? Right. I just want to kind of express a belief that I see and see if there's a way to kind of destroy that belief and create a new one. But why do we not use indicators? There's 17 people on here. They are late. Everything is late. You believe structure would be the best? So you're saying that it's a binary thing. It's something is useful or something is not useful. Is that what you're telling me? Are you saying that every concept that you are using is binary in terms of it works or it doesn't work? Is that would I be wrong to say that? That doesn't answer the question though. So with everything that you use, from models to structure to POIs to volume to momentum, do you think everything is binary in terms of it works or it doesn't work? Because I don't want us to neglect indicators. I don't want us to neglect them because there could be some very useful ones, and it doesn't have to be anything that measures tendencies. But there's also strategies that are indicators. There's indicators that show POIs for you and stuff. You know what I mean? I think the S&P community feels our brain to make PA king and indicators are lagging. It's just an ego thing. Yes, I wouldn't even say it's an ego thing. I would say the people instilling the belief is an ego thing. But I would say that the reason that most of us don't use indicators, don't leverage them, is solely because we have been given the belief that they are lagging and they do not work. But let me ask you something as well. Who has had the same amount of sample sizing with their actual, model testing and their style testing with indicators? Because we could say that they lag, but why is that a reason why we can't use them or leverage them or use them in any type of way? Because this is not a binary thing. This is I want to say it's like a spectrum, right? Like I would say, right, it's not that structure or understanding structure works or it doesn't work. It's how much does it work or how much, or I guess much maybe isn't the right word, but you guys get what I'm saying. It's not that something works or doesn't work, but how does or what is the amount that it does work, right? And you could use that for systems as well, like the order flow disruption model. How much does it work for you? It's not that it works or it doesn't work. It's just how good or bad does it work? Used in conjunction, they could increase the win rate. Yes. Why? Because everything that we trade, guys, everything is patterns, right? Everything is patterns, meaning everything is probability based. So if you add more confluence, then you're adding more filters, right? More filters, less trades, potentially higher probability trades that you would take. And that would increase the win rate on paper, right? Theoretically. But I want to break this belief today where I don't want you guys to not use indicators just because someone on the internet that tells you that. Because the lagging thing, that's something everybody has said. Even I have said that over the years, right? But I want to break these beliefs because for the most part, um, these indicators, like I said, they're just filters, they're extra confirmation, right? And if they can increase your win rate, cool, right? But it doesn't hurt to try them. I'm not saying to try them, I'm just saying be open to them. That's all I'm getting at. Because any of these beliefs that anybody on the internet is giving you, I would take them all with a grain of salt, even mine, right? If I give you guys some type of advice or tendency or anything that I know, you take that with a grain of salt, you measure it on your own time, you back test it, you see if it works for you, and you try to make it fit. So why not do the same thing with indicators? Why not do the same thing with other things? You know what I mean? Other styles, um, other types of tendencies. That's how we as traders are going to grow. We have to be open to hearing out people who even trade support and resistance. What's wrong with trading support and resistance, right? That's another belief, right? Like every system works, and we know that, yet we still shame other styles, right? And maybe not us specifically, but I would say the SMC community as a whole, especially the ICT kids. Don't even get me started on them, but they shame everybody. But it's never about does something work or doesn't work. It's how good or bad does it work. So we have to be open to these other styles, these other types of traders, if we want to be enlightened to a new POV. Yeah, they're all strategy. Everything is a pattern. right? Every model is a pattern. Doesn't matter if you add complexity to it, right? Um, because like that's kind of what we talked about on a previous Zoom. It's yeah, you could trade maybe an OFD model, but you could add dimension to the model. It's I will take a scalp OFD when the intraday direction is in alignment, but also when the daily is here, and I'm also only taking this type of scenario during X amount of kill zone time. So that kind of adds dimension to the model. You use the MACD, okay, cool. Does it work for you? Is there success behind that, or do you just like this is also too? Is just like the strategies that you're using. Are you using them because you think that they work? Have you tested them? Right. So it's just I want to just open up the mind and be open to different things, right? Because you never know what's going to be useful to you. Everything is just it's so it just depends on the individual. The strategy does not work for everybody, but who's to say a certain strategy doesn't work for you, but you won't use that strategy because you have a belief that um that it's not going to work because so and so said something. You know what I mean? I just don't want you to hold yourself back with just a silly belief. Yeah, right. See, volume worked for you, but I hardly use volume now. You know what I mean? So it's just you have to kind of play a trial and error game with this stuff. So yeah, I want you guys to be a little bit more open to different styles, different things, different just everything that revolves around trading, whether it's a risk management system, right? Some people are okay with risking 3 to 4% per trade. Some people are, only using 0.5, 0.3% per trade, right? You have to find what works for you. But yeah, hopefully that makes sense to you guys. I just kind of want to really break that belief, just because it's a belief that I also want to break, and I think it could greatly help a lot of you. So yeah, guys, these beliefs, what would you guys say is another belief that could be holding you back? Because most beliefs are very limiting, right? Like the sky is literally the limit, and I feel like a lot of us don't understand that, don't get that, and we get too caught up with just other things. I'm not gonna say silly things, other things. What would you say is another belief within most traders that kind of holds them back? Guess that's my last question for today. Ah, being a great one. Perfect. Another one. I honestly, just because I was super out of touch with the whole just social media space and in terms of trading, I never knew that was like a standard of reaching 10% a week. I never knew that was a standard. Um, and yeah, it's ridiculous. What do you guys think is the actual reasonable amount that would consider it would consider you to be profitable, but what do you think is the actual industry standard? How much do you have to make a month? A month. Yeah, how much is that a month? Because I will tell you the standard or the high end of the standard, I'll tell you that. Yep, 3%. If you can make 3% every month, you are profitable. And you would be probably considered to be in the top 1% of traders if you could do 3% a month. And I think that really, really, if we actually understand that, then we stop. I think the biggest thing, especially if you're trying to imitate a style like mine, is that you stop risking 1% per trade. Because for the most part, right now, with any accounts that I'm using, it's anywhere from zero point 0.3 to zero point 0.5. That's kind of my risk profile for the most part. Take 2 to 3 losses, I'm done for the day and move on to the next. Right. And I'm just trying to build that cushion. Leverage the cushion. Why do we consider 3% to be low then? Exactly. Thank you. Exactly. There is no reasonable answer there that I would probably agree with anything above 3%. So you just gotta have the expectation be reset. Like you don't it doesn't make sense to expect 10% a month because who does that? But yeah, these expectations, they're killer, man. Expectations are killer. I'm not saying to have low standards as well. I'm just saying to have realistic standards, realistic expectations, right? Because for the most part, you guys know that I mainly cover the idea of winning a trade. That's kind of the point of my entire approach is how to win a trade because that is where everything is built off of. 3% is built off of learning how to win a trade. Right. Building your psychology is built on building confidence. You build confidence by doing a bunch of stuff. I wouldn't say correctly, but I would say do it. I guess we could just do correctly for argument purposes. But you build confidence by taking these small wins consistently over time. That's just an opinion for me. You want to have enough proof to yourself that you are doing that you know what you are doing, and that is where the confidence will come from, and that is also where the intuition will come from, right? You can't teach market IQ, you can't teach experience, right? I cannot teach you guys that. You guys cannot become traders or become better traders without trading. That's just bottom line, you know what I mean? And I can't teach you that. That's something that you do. That's why I try to be heavy on the maintenance side. I try to answer every question, every DM, within 24 hours, just because that is something that I can control. That is something that I can work on for you, right? But in terms of the back testing, the stress testing, creating the models, it's very, very hard for me to teach you that because there's just too many components and every individual is different. So that's why I really focus on just showing you guys how I win trades and I try to decompose the idea of winning a trade, which it's if you want to decompose it to the rawest form, it's a bias and an execution. How do you find your bias? How do you find your execution? That's all it is, right? Because you can have a bias but no execution. You can have an execution without a bias, and they could usually result in losing scenarios. So, you know what I mean? So that's kind of all that I can really do for you. That's why I focus on the journals, I focus on the Zooms, etc. But at the end of the day, you guys have to put in the work. It takes a lot of weight off our shoulders when we have realistic expectations. Yes, it does. Most of the pressure that you give yourselves is all self-inflicted. Just be real. Like most of the stress you give yourself is all self-inflicted. And that applies to me as well. Like I'm no different from you guys. Mhm. Cool. So any more beliefs you guys want to cover or any questions, any case studies, anything you guys want to show me? Because I know you guys tap trades. I just don't know why you don't show me. But yeah, I hope today's Zoom, I would say in summary, today focus on having realistic expectations and kill these limiting beliefs. But yeah, if you guys have no more questions from that, that's all I got for today. Cool. So we're good, guys? All right, guys, we will continue probably next week. I'll be on Alex's Zoom. So with that being said, have a great rest of your weekend and make sure to send me journals, case studies, and questions, etc. And we will see each other next week. All right, guys, y'all take care.